Super.
Historical 21-year. If the SIPs keep running, what's the compounding through such phases as well?
Super.
Well, let's just quickly get in Mark Matthews, the bank Julius Baer and Company with us. Mark, great to have you with us here on the program. Thanks for your time. You know, it's just, of course, valuations are the broad problem. Maybe we did it ourselves, right? Too much of a good thing. So there's a big hangover, and it'll take some time to pass. But the other thing, of course, all these tariffs, etc. How do you view this? And how important is this going to be in an Indian context, Mark?
The first thing is I still think India is a buy and hold market, and it's buy on dips. So we've got a dip. It's a good time to buy. Once in a while, a market goes down. I mean, we're all used to that. And to my mind, it's still a good story because it's got above average economic growth relative to the rest of the world. And that should translate into earnings growth. As far as the tariffs go, I think we all know that the U.S.-India trade relationship is not nearly as substantial for India's economy as the trade relationship between the U.S. and many other countries in the world. India's growth engine is its domestic economy, and so the market's in a fragile kind of mood right now, so it's reacting to that. But I can't really believe that longer-term tariffs from the United States would be enough of a story to materially derail India's growth. And I also can't believe that Prime Minister Modi and President Trump can't do a deal. I think they will. So I wouldn't worry about it.
All right. Hi, Mark. And good to hear your optimism on the Indian markets. And I recall, when we spoke sometime towards the end of last calendar year, you said it's difficult for foreigners to come back, at these sort of levels on the Nifty. Well, now we have pulled back a little bit. We have cooled off a little bit with good reason because we have earnings growth that's slowed down as well. Given the kind of selling that you're seeing, do you think now, gradually we should see some kind of stemming off of the selling number and maybe in the second half of the year, look at some buy flows coming from the foreign investors? Because that's been a big pain point here in the Indian markets.
Yes, it has. I think the complication now is China. And the issue is that I think for some time now, foreign investors, or I should say investors in general, have been looking to diversify. They want to be in the market, but they're worried about the concentration of their portfolios in the very large technology stocks in the United States. Because those share prices have gone up so much, they're now, an incredibly big part of many people's portfolios. And I'll give you an interesting statistic, which is the Magnificent Seven are worth more now than Japan, the UK, Germany, and India combined. And when I read that, it reminded me of back 30 years ago when I was a stockbroker. I guess not 30, but after the Asian crisis, there was a time when HSBC alone was worth more than the markets of Indonesia, Thailand, the Philippines, Malaysia, in other words, Southeast Asia. And we just knew that didn't make any sense. And I think people kind of know today it doesn't make any sense for such concentration to be in the Magnificent Seven. And what I want to say, therefore, is that I think there have been two major news that have come out of China that have suddenly made China investable again to many. The first was the DeepSeek story, and the second was that BYD is now offering driver assistance for free, technology driver assistance, self-driving, in other words, on basically all its cars, even the Seagull. So I think that shows that China does produce very good things that are competitive with the United States and are a positive force of deflation in the world. And unlike India, China is cheap. Even Alibaba, which is growing strongly, it's got $80 billion in cash on its balance sheet. It's still only trading at 15 times price earnings. So sorry, a long-winded answer to your question, Nigel, but what I want to say is the problem for India, as far as foreign appetite goes, is the bandwidth for emerging markets has basically been taken over by China, and I don't see that changing.
Oh.
All right. Mark, a fantastic perspective. And sometimes it's so great to go back in history and find that point in time, right, which kind of generally, broadly, not exactly fits, but matches. And those things are useful to think about what you're seeing in the market right now, like with the Magnificent Seven, as you said. Thank you again for joining us and taking us through all of that. We'll take a quick commercial break here. We're going to come back and